This is the Southside School of Financial Freedom Watch List and Market Report for the week ending October 24th, 2020. Our question this week is, who has greatly benefited from the pandemic? The answer will be provided later in the video. The market does one of three things every day. It goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways. Economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was down. The Dow Jones Industrial Average decreased minus 0.10% on Friday and was down minus 0.95% for the week. The S&P 500 increased 0.34% on Friday, but was down minus 0.53% for the week. The Nasdaq increased 0.37% on Friday, but it was down minus 1.06% for the week. Looking at the week, we can see that there were 7 down finishes versus 8 up finishes for the indexes. All were down on Monday and Wednesday. They were all up on Tuesday and Thursday. On Friday, the S&P 500 and the Nasdaq finished up, but the Dow Jones Industrial Average finished in the red. The new unemployment claims were 787,000 versus 875,000 expected. Continuing unemployment claims were 8.37 million. That's a million more. That was a more than a million drop. Nancy Pelosi had set a 48-hour deadline on stimulus negotiations earlier in the week, but as the negotiations went beyond the deadline, she stated that despite progress, a deal may be far off. An AstraZeneca coronavirus clinical trial participant died. Gilead Drugs remdesivir was approved by the FDA as a coronavirus treatment. Goldman Sachs was fined and agreed to pay $2.9 billion for some financial shenanigans in Malaysia. And the last presidential debate before the election was held. New unemployment claims, stimulus negotiations, coronavirus clinical trials, approved drugs, corporate misdeeds, and the related fines, and the presidential debates are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, one of the top powers that be is Congress. Politicians will do what they must to drive the stock market up. However, as we've seen for the last few weeks, sometimes they want to suppress the market. Congress is delaying a stimulus deal to hold the market at bay. A high stock market is deemed as beneficial to the president. Democrats do not want to give the president a perceived win. Never mind that the American people are in desperate need of assistance because of the pandemic. Which brings us to our question of the week. Who has greatly benefited from the pandemic? Billionaires. According to an article in the New Yorker magazine, U.S. billionaires saw their combined net worth surge by more than $930 billion, bringing the collective wealth of just 644 people to a staggering $3.88 trillion. Now, let's look at America's favorite billionaire, Jeff Bezos. Jeff Bezos owns 54,470 54,474,800 shares of Amazon. The price of a share of Amazon on December 31st, 2019 was $1,847.84, and it closed on Friday at $3,204.40. His wealth, based on his Amazon stock alone back in December 31st, 2019, was 100,660,714,432. Now, his wealth, based solely on his Amazon shareholdings, is 174,559,049,120. Yes, Jeff Bezos is more than 73% richer this year than he was at the end of last year. Do you own any Amazon shares? How about Apple or Facebook? Are these stocks going to continue to go higher? Is the stock market going to continue to go higher? I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside trading strategy. Learn more about the Southside trading strategy at the Southside School of Financial Freedom.com. Here is my trading watch list for the week ending October 24th, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Canopy Growth Corporation. Ticker symbol CGC. It's in the first column. It increased 11.09% for the week, though it was down on Friday, minus 2.81%. Canopy Growth is a marijuana company. They produce a variety of marijuana products. Marijuana stocks have plunged from their highs of more than a year ago. However, they have been on an upswing lately, and Canopy Growth has been one of the strongest performers. Actually, this is the second time in the last 3 weeks that it has been the strongest performer on my list. Will it continue its upward momentum? I don't know. I did trade it this past week, and I have traded it and generated cash flow from it in the past as well. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of October 24th, 2020, my portfolio is outperforming the S&P 500 index ETF SPY. Year to date, my portfolio is up 19.97% versus 7.10% for SPY. a difference of 12.87%. I am beating SPY by 12.87%. This week's equities, including puts, calls, and ETFs, make up 66.73% of the portfolio. Cash is 33.27%. The cash flow generated for the week was 1.86% of the portfolio account value. The account value changed by 0.33%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.43%. I sold option contracts on 10 positions this week, 7 calls and 3 puts that range from $103.37 to $598.66. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of FinancialFreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.